And that first fund, Howard, you'll recall that there was an energy collapse in the late 80s. And so what did we do in the first fund? Sort of waiting for the environment to come our way was basically play around in the oil patch, drilling rigs, buying debt secured by drilling rigs, whether it was Redding and Bates or Zapata. Also, there was a utility that had issues because of a nuclear problem. Public Service in New Hampshire bought some of that, secured debt there. Basically kept it very, very safe, grinded out some pretty good returns. And then in late 89, early 90, we could tell that something was going on in the economy. And this is when I turned to Howard and I said, boy, it would be great to have a lot of money right now.
Yeah.
Now, a lot of money back then was like a couple $100 million. But again, I put the horse on Howard's back and I said, can you raise us a lot of money? Because I think there could be a great opportunity here, particularly if defaults in the high yield bond market pick up.
Well, and in fact, the LBOs that Bruce described as having taken place in the LBO boom of 85 to 90 were generally financed with 95 or 96% debt.
Yeah.
So there was just a tiny cushion of equity at the bottom, and once you got through that in terms of diminution of value, you would start having defaults quickly. So we went out to raise Fund 2, and we raised, as I recall, $280 million, which was a lot. I don't know how we did that, frankly. But I have no recollection. But then
wasn't me.
But then if you look even further, what I really can't.
It was
remember,
actually 400 in total. 2B. Are you? Oh, okay, sorry. I gave away the punchline. I'm sorry.
But what I really can't remember, if you look back, and maybe you can, is in our business, in the fund business, the norm, private equity, venture capital, what have you, the norm is you raise a fund. You can't raise the next fund until that fund's normally 80% invested. So we raised Fund 2, but we put in there language. We asked for the ability that while we were investing Fund 2, if great opportunities come along, we should be able to raise Fund 2B, even if 2 hasn't invested yet. And I don't remember where we got the nerve to ask, and I don't remember why anybody said yes. But they did.
Well, I do. Let me tell you why. This could have been the very, very first Howard Marks memo, because he wrote it. I mean, he's a brilliant writer, as you know. But even back then, he was a brilliant writer. And you crafted a memo, probably on one page, because you like to get everything on one page, and laid out the case for why investors should give us money in this B tranche. Yeah. And it was brilliant, and we found some takers. Yeah. And
so we raised as I recall it, memories are not perfect, but as I recall, we raised $280 for Fund 2 and $240 for Fund 2B. So we raised Fund 2 in July of 90, and then in the fall we said yes, there's going to be more defaults, and defaults were starting to happen. So we raised $240 for Fund 2B in December of 90.
And I put that money to work very quickly.
Yeah.
The markets in 90 and 91 were in a very deep recession was unfolding, which, by the way, was accompanied by S&L failures and terrible
Gulf War,
depression, very serious recession in the real estate industry.
And the government mounted a jihad against high yield bonds. Drexel Burnham, Michael Milken went to jail.
Yeah. Well,
and when they took out the leading investment bank for high yield bonds, meant there was nobody around to do exchange offers, and
default rates in the high yield bond market spiked to double digits 2 years in a row. It was really a great time to be a distressed investor. And by the way, we had much more money than virtually anybody else. I mean, I think that period really put us on the map.
Yeah. Oh yeah. Well, and
those returns were, you know better than me.
Well, those those
like
funds,
40% or
45% a year on those funds, without using any leverage. So if you're ever tempted to compare the returns versus private equity, for example, which I would say in those days probably aspired to the same thing, but was using 5 times leverage.
Now, if you like this video, don't forget to smash the like button and to subscribe to the channel. Thank you very much.